and we'll just do our disclaimer here. Today's presentation is educational material. It's for general guidance only. FP Markets does not give any warranty or representations out of the material, and we recommend that you seek professional advice before acting on any of the information in today. It is purely educational. We are going to have a very close look at the markets today and this indicator ICHIMOKU, and see how that works. So, as I said, today's presentation is being conducted by the Australian School of Technical Analysis. You'll find us on the web, www.theaustralianschooloftechnicalanalysis.com.au. Have a good look through the website. It's there for a lot of information on there, and some good videos at the back. All right, a little bit about myself. I hold the Australian Diploma in Technical Analysis through FINSA. I'm certified with the International Federation, IFTA, hold the CFTE accreditation. I've spent 6 years on the desk with Macquarie and RBS and Wilson, among a couple of others. I hold AEDA 1 and 2 in derivatives accreditation, and I'm also a member of the Australian Professional Technical Analysts Association. Oops, hang on, jumped ahead a bit. Here we go. Today, at the end of this presentation, this is really a lead into the workshop that we're conducting in Melbourne. It's a free workshop that I'll be conducting a full day on behalf of First Prudential for their clients and friends. The day is about trend analysis and looking at trade setups at the end of the day, but really how technical analysis works with price patterns and trends, what to look for inside patterns, use of a couple of indicators. We have a very close look at ICHIMOKU, becoming a lot of interest in ICHIMOKU these days. I'm going to go through ICHIMOKU after this short first presentation and have a look at how ICHIMOKU works in the live markets. We'll take a look at that. I've got that set up in the background. Now, first of all, when we get down to technical analysis, there's as you know, mountains of books written on the subject, and all sorts of different variations of variations in this subject. Essentially, what it comes down to, and has never got away from, is this idea that at times there are bullish markets and bearish markets and bull markets, where the where the participants are all agreed that they're willing to pay higher and higher prices, and then you have the bear markets where there's a loss of hope and markets move into selling and then ultimately distress selling. They're generally at the top of markets where this area of loss of hope is. There is maximum leverage in the market. No further money can be raised to keep the market going, and essentially leverage bites and markets come off and essentially break down as more and more positions get closed out and people leaving the market. It then goes into a technical selling area and then into the ultimate distress selling. Now, it's quite interesting that when you look at this really simple model of price movement, this occurs in all different time frames as well, not only in major indexes and major markets over many years, but also right down into days and weeks. And this is where technical analysis really comes to the fore in finding potential trades, because ultimately after this distress selling area you get a short consolidation and then the buying against the move. And this is where the big money comes in. This is where the institutional money comes in, not the domain of retail traders per se, because they have a different mindset than the institutional trader. And then it comes into technical buying and then the speculation top, and then again markets move over. We did a workshop in Sydney here a few weeks ago. I went through this model and this following one here, this idea of trend. It was quite interesting with the feedback. A number of people said it was too simplistic, but it's actually the only way the markets work. It is the only thing that gives us any insight into future price moves, is looking at past price moves and with the potential that they may continue. So when we come into looking at price action itself, we look at the and this occurs in all time frames, but we have what's called a primary phase of the market, where in this case a rising market, and new highs are made and higher lows are made. So if we get to a chart, we find there's a low in the price action, market rallies, or market moves up, prices move up, they retrace and form a higher low as buyers come in a bit earlier, and ultimately if the price moves higher, it breaks the previous high. Now this exact area here is the point of trend. Now when we talk about a primary market, we're talking about big time frames like weeks and months. This is where we establish where a primary market is going, and then we look for this type of price action in those time frames to establish how we're going to trade the market in shorter time frames, because there is nothing better to do than trade with the primary trend of the market, primary move of the market. So a trend is established. This model shows that a trend is established here at the break of the last high, and market moves higher, and hopefully markets will continue to move higher and higher, and then as that comes to an end, the market will set a lower high of the previous higher low here. The first low here was actually a higher low from the previous bull run. Market runs in, the bulls can't push the market any higher, and market breaks the previous low at this area here. This is the start of a primary downtrend, and this occurs, as you know, in weekly and monthly time frames, but also occurs right down into intraday type of intraday charts, intraday trading, because it's an area where stops and things are set, or stops are set there, or people take their losses or stop losses, or they actually enter short positions based on this model, and all we want to do is go with them. So that's our very simple model of trend analysis. It really is the basis of all other technical analysis, including Elliott Wave, various other methodologies, Wyckoff method, that type of thing, all based on this price movement of lows and highs and higher lows and lower highs and lower lows when identifying price action. When you look a little bit further into this, these retracement areas that occur inside stocks and indexes and futures contracts, currencies even, these areas, these retracement areas, they generally last about 3 weeks to many months, and this can be one of the frustrating things of trading, is that a lot of time, a lot of stocks are consolidating into these what's called a secondary market, or a consolidation secondary market, and then we're looking for the buyers, in this case the buyers, to come back in and start pushing the market higher after this period of consolidation. They last from 3 weeks to many months in the primary market, in the big market moves. So it's not a precise outcome, of course. Many factors, both fundamental and technicals, fear and greed, and percentage buying and selling as institutions move their weighting of their portfolios around. These areas are of great interest to them. So what it looks like on a chart here, this is the XJO, the Australian XJO, was taken a few weeks ago, and it's a weekly chart. Shows back here on the left-hand side of the screen, shows this corrective move last year, June and July, moved straight past the previous low here, the higher low that was part of a previous trend. The market had a corrective move. It had the secondary consolidation, and then finally the primary move occurred in the direction of the major trend right here in early July. So this primary move here, this is the one that sets it apart. This candle here sets itself apart from this consolidation in the background. Market moves higher, makes a higher high, makes a higher low in here, makes a lower high, and fails to make a lower low, but continues on to a higher high, and again higher low, higher highs. And recently, last May and June, we had this bullish pattern form itself here. It took several weeks to work itself out, and as you know, this week and last week, the market's broken from here and started to move higher again. In fact, as you know, today we're trading at a new 6-year high in the index itself. So this is the primary move. We look at the main direction that prices or indexes or futures contracts or anything is going. We look at that main direction first, outside in this weekly and even monthly time frames, to establish to establish the primary market for this particular item. When we look a little closer at the right hand side, if we took this last couple of months here, and had a look at it in a different time frame, the daily time frame, in here we can see that the same thing has occurred: the low, the high, the higher low, the higher high, and then the higher low, but the lower high broke to a higher low still from the previous one, went to a higher high from this consolidation in the middle here, and then broke down into this lower high, lower low, which was shown on the weekly. This breakdown here on the right hand side is this weekly consolidation. This is the secondary market. This is the one that takes from 3 weeks to many months to work themselves out at times, and this one certainly took 6 to 8 weeks to get itself sorted, and that was this area in here. If we look closer again inside this market, inside this last couple of days, last 2 weeks, inside an intraday time frame, an hourly time frame, you can see that just at first glance, the big moves, so the green candles there, the primary moves of the market, they're reinforcing that the bulls are in control. Haven't taken full control, but at least the strong moves are in the direction of the primary trend, which we established in the weekly time frame as being up. So as you know, this market has broken out from here and is looking okay. We'll take a look at that in a moment. So let's have a look at some of the charts and just put this really simple methodology to work. And here we have, this is my little charting package, and we have, in this case, BHP today. Just as the chart on the right hand side is your weekly chart, I'll just open it out, and you can see that it has had this long consolidation period. This secondary market has occurred in BHP, and just suddenly this week it has broken out to the high side off the support levels of around 35.20 and is now broken out of here. And you would expect that this primary move here, if we close this up a little bit, this primary move here would be setting itself up for the stock to start trending. BHP earlier, the last few years, has been trending down, and then this long consolidation formed an uptrend in here last year. 2013 formed a small uptrend, went back into consolidation, and is now starting to move out of this pattern on the right hand side. So it's really worth watching to see where this goes in the longer time frame. When we look at BHP in a daily time frame, you can see that the daily trend here from May, June was actually down, trended down, and then had this opening gap in the middle of June, a small consolidation period, and then the break again. So the break is in this direction, setting a higher low, and it's broken to a higher high. This is your signal. There's an uptrend, daily uptrend in place in this case, and the market has set a higher high from this high back here in the middle of June, set a higher high, higher low, and currently out here setting a new higher high. So essentially that's what we're looking for in price action. One interesting one that came up during the week was Qantas, and if we look at Qantas in the broader weekly chart of Qantas, you notice that the primary trend on the left-hand side has been down, and this rally in here really didn't change the trend, and the primary trend ensured down here, down to the December low. It then set a lower high, but set a higher low here in February this year, set a higher high, set a higher low, and it is a higher low, this area in March, and set a higher high, and currently you can see it's setting up this really nice consolidation area and looking for a breakout on here. So the idea is that the primary trend in Qantas has changed to up, and just looking for further continuation of that trend. And this is where risk comes in. It's a matter of establishing your risk where you might enter something like that. If we look at this in the daily chart, again you can see that this daily trend has been down. through here. The daily trend is down against, we'll go back, against this weekly uptrend. This weekly uptrend that really started last year and has established itself as an uptrend. And it's quite an interesting chart at the moment with everything going on around it. If we look now at our index, our current index, we take a look again at the weekly chart. If you study a chart, you'll notice that this current weekly pattern here is very, very similar to the Dow over the last 6 months, where the Dow had this long consolidation period and eventually broke out and is now, as you know, heading over 17,000 points. But again, this weekly chart, short downtrend here, set the low, set the higher low, set a high, higher low, higher high, equal low in here, higher high, higher low, higher high, higher low, higher high. We had a corrective move. We talked about that in the first slide. Set the higher high, set the higher low, set a lower high, but set in February this year a higher low. This is so important, this observation of price action on charts, where markets just don't go below their previous lows and where they do go above their previous highs. So we set here an equal high, and currently we've got this consolidation, this secondary market formed in the index, and this week we're starting to break through the top of that area. In the workshop that we'll be conducting in Melbourne, we'll be going into this type of pattern in a little bit more detail, but this is really quite bullish, this pattern, the way it's setting itself up and breaking out. So it remains to be seen where it goes, but it is essentially directional, simply a directional trade. All right, so we'll have a look now at, so I want to get back to the charts at the end of this webinar, but I first of all want to look at ICHIMOKU and how that works, and then we'll come back to the charts with ICHIMOKU on there and see if that makes a difference to our viewing of price action. Before I leave this, as I said, there is a workshop being conducted in Melbourne on August the 23rd. It's free. It will be in the Melbourne CBD. We haven't got a place for that just as yet, but essentially it's an 8:30 start right through until 5 o'clock. It is a very full day on technical analysis. There's no mucking around. It is looking at the right-hand edge of the market, and will actually be an extraordinary day. The one in Sydney was extremely successful. FP markets really do invite you to come along to this. Okay, let's take a look at ICHIMOKU. ICHIMOKU was developed in Japan by a journalist and sat on for many, many years before he actually released it or published a paper on it, and then before anyone took any real interest in it. So ICHIMOKU is described as equilibrium at a glance. So it's looking at a glance how prices are trading, whether they're in equilibrium, whether they're in support resistance areas, or whether they're away from their support resistance areas, because as you know, markets come back to their mean most of the time. And so ICHIMOKU is a very good observation of where prices are actually trading. So we'll take a look at how the elements of ICHIMOKU. It is a system. It is composed of 5 elements that were developed to show only support and resistance. ICHIMOKU does nothing else except show support and resistance. And it's not moving average based. There is no other maths in it except price action. And so the first component of ICHIMOKU is the CHIKOU span, this purple line here, and the CHIKOU span is simply the current closing price. You see on the right hand side, this candle on the right hand side, it is that current closing price shifted back 26 periods. So as that candle finishes, that will lock in that point, and it'll then go to the next point. You can see the red candle on the right hand side. As that candle closed on its low, it locked in the CHIKOU span here at this point. So all it does is show you the closing price, the current closing price, and it is shifted back in the chart 26 periods. And so the observation of the CHIKOU span is you just get to notice whether the current price, the price on the right-hand side, is above the price it was 26 periods ago, or whether it's in the price it was 26 periods ago, or below the price 26 periods ago. So you'll notice as this little chart here rounded out the bottom here, the CHIKOU span was trading inside the price action. So the prices over here on the right-hand side that set the CHIKOU span back here show that the prices were no higher or no lower than 26 periods ago. So when the CHIKOU span comes out of price, this is where it starts to get interesting. This is our first observation, our first bullish observation of ICHIMOKU. So it is simply the closing price set back 26 periods. CHIKOU span is a current closing price shifted back 26 periods, allows the trader to see at a glance if the current price is above or below the price 26 periods ago. So it's bullish if the CHIKOU span is above the price, it's bearish if the CHIKOU span is below the price, and it's neutral if the CHIKOU span is in the price. The next element of ICHIMOKU is the TENKAN sen. TENKAN sen is made up of the highest and the lowest price over the past 9 periods divided by 2. So in this example here, we've got the spike high here at 41.71, and then the low here at 39.06. There's 9 periods in there. It takes the price difference between those two and it creates the TENKAN sen line as 50% of that value. So it's not looking at closing prices, it's not looking at average prices. It takes the highest price and the lowest price and divides it by 2. And this is considered the first level of support and resistance. It is the TENKAN sen, or the red line. TENKAN sen and the KIJUN sen, which I'll come to in a moment, measure the short-term trend and the short-term support. TENKAN sen is following price indicates that the trend is strong. So if the TENKAN sen here is following up through the price, it shows that the trend is reasonably strong. Price movements are reasonably strong. Where it flattens out here, areas where it goes flat, price is consolidating. So the first observation of the TENKAN sen is if the line is above or below the KIJUN sen. So the KIJUN sen in this example is the green line. KIJUN sen is the highest and the lowest price over the past 26 periods divided by 2. So everyone wants to know, why is it 9 periods, why is it 26 periods? Very simply that on average in Japan they had 26 trading periods in a month and 9 trading periods in a fortnight, because the markets were open on Saturdays. So the second level of support is found as the second level of support and resistance. So in the previous note we said we wanted to know whether the TENKAN sen is above the KIJUN sen. In this case it is. So it is the highest and lowest price over the last 26 periods and then divided by 2. Gives you the KIJUN sen value. The future cloud in ICHIMOKU again is shifted forward. Whereas the CHIKOU span is shifted backwards, the future cloud is shifted forward. It comes from looking at price again, and it is simply projected forward in the chart. And most trading charting packages should have the ability to make space at the right-hand side of the chart to shift the cloud into. So the SENKOU span A is simply the TENKAN sen and the KIJUN sen divided by 2 and then shifted 26 periods into the future. So it's the TENKAN sen, the red line, the KIJUN sen, the green line, divided by 2, those two values divided by 2, and the span A line is shifted 26 periods into the future. So it's setting up future support and resistance in price. The B line, this is the most important line of the cloud. SENKOU span B is the highest and the lowest price of the past 52 periods, then divided by 2 and then shifted 26 periods into the future. So it's simply the highest price up here at 41.71, the lowest price back here 52 periods ago, and that difference in price divided by 2 sets up the value of the SENKOU span B line. And again, as price consolidates, this line will go flat, and then as price starts to move, it will follow price will set it up so that it's actually following price. When this cloud in this area, this forward cloud, when price eventually reaches it and the cloud is continually extended forward with the prices that are being generated to reach there, it also sets up support and resistance depending which side of the cloud that the price is on, or indeed if the price is actually in the cloud, as you can see here on the left hand side. So simply the 52 periods divided by 2. Ichimoku and time frame analysis, this is where it gets a little bit of work in Ichimoku, but very easy to see, is that high probability trades occur when the price finds support or resistance in multiple time frames on different elements of Ichimoku. So direction and length of trend need to be considered for higher probability outcomes. You cannot get away from the idea of looking at trend inside price, looking at the actual price action. First, a very simple methodology is what we talked about at the beginning of the webinar, but essentially that's the first thing to do, and then see how Ichimoku shows up as support and resistance. Now, if we put this to work here, let's change my workspace. Alright, so on your screen now we should have 4 charts showing Ichimoku on each chart. Now on the top left hand side, this is an intraday chart. It is the Australian dollar. I've got the Australian dollar on all 4 charts. It is an intraday chart. It's a 15-minute chart of the Australian dollar. On the top right hand side, it is a 60-minute chart of the Australian dollar, same thing, with Ichimoku on there. On the bottom left, we have a 240-minute chart or a 4-hour chart of Ichimoku showing the same thing, Australian dollar. And on the bottom right-hand side, we have a daily chart of the Australian dollar. So first observation with this, and we'll go through a couple of currencies here, but the first observation with this is that the SENKOU B line is moving upwards. So the longer term in currency trading, a day is a long time, as you know, but the longer term view is that the cloud is actually moving upwards, and you can see here that in the past here the A line is above the B line. This is quite bullish and it's quite thick, and then we flipped over here for a short period, and it's now the A line is above the B line again. However, the B line in the future cloud is now flat, and the future cloud out here on the right hand side on the daily chart, it's flat at around about 93.55. So it's showing that the Australian dollar in cents should have support around 93.55 should it pull back into that area, which is basically where it is right now. So it's looking at the past 52 periods and setting up this future cloud, but the future cloud is telling us that the support area is 93.55, and currently the market is on that support. When you step back in time into a different time frame, into the 4-hour chart, you can see here also that the price now is actually below the cloud. So we've got this, and I'll go back to my daily, we've got a situation where the price is above the cloud in the daily, but as we get into this 4-hour chart, we can see that the Australian dollar is now trading below the cloud, and the red-green lines are setting up support and resistance. So take a close look here. The green line, the TENKAN Sen line here, the green line is, you can see the resistance has been set up at 93.67. So that's its first level of resistance. In this very simple 4-hour chart here, you can see in a 4-hour time period, the Australian dollar is starting to move down or trend down. Initially had resistance back here on the cloud, on the B line. The B line, the SENKOU B line, generally sets up fairly strong resistance in price action. So as this market was trading right over on the left, this future cloud was being set up as a resistance point, and the market's traded up to that resistance point and fallen away. Price lost here in the cloud for a short while and has now moved below the cloud. So now we have a high, we have a low, we have a lower high and a lower low, and currently we have a lower high with resistance set up on the green line, TENKAN Sen line right here. If we go back here into the 15-minute chart, we can also see that the CHIKOU span is now coming out below the price action, so the price is lower than it was 26 periods ago, but currently the price is in the cloud. Not a lot to do here in the short term, and the future cloud has suddenly got very thin and a little bit bearish on this 5-minute chart. So when we set up our price action on here, we can see if the price breaks down on this 15-minute chart, our future support levels, there it is there, 93.54 on a 15-minute chart. On the B line, it's the same line in the 1-day chart, 93.55. So we should see a bit of support around that area, but from a trading perspective, probably not a lot to do. You can also see in the 60-minute chart that the KIJUN Sen line, the green line, is currently setting itself up at 93.49, 93.50, about 5 pips away from the major support levels. So it may trade back to that area, but it's suggesting that there's quite a bit of support in different time frames coming up on this currency pair. If we take a look at, say, the euro, bring out the daily chart again on the euro. Again, you can see at the left-hand side, market has moved down through the cloud. It's starting to trend down. We had a low, a high, a lower low. We had a higher high here, but a higher low, lower high, and currently a lower low. And maybe my data hasn't updated there, but breaking down here. But the thing to observe here is it's actually below the cloud, and now the red line, green line are basically the same values as each other. Big resistance up here on the euro at 137.47, and again consolidating here on the right hand side. So we go a bit further, we'll look at the 240-minute chart in here. So as you notice that the price has come down through, there's your resistance areas again on this SENKOU B line. And so quite a bullish candle, but met immediate resistance, and then the price has now fallen away and fell strongly out of the cloud. You've got a red line, green line cross, setting up a bearish move on the way down. So the market here at the right-hand side at the bottom is consolidating. The future cloud is heading down, so you'd be looking for a trade in the direction of the primary move here, and with the future cloud showing that there's potential resistance. If the market moves up from here, your first resistance will be the TENKAN Sen line, your second resistance will be the KIJUN Sen line at 135.79, and your third resistance will be at 135.84, the future cloud. So lots of things to do here. Primary move is over in this particular time frame and would suggest a little bit of consolidation to take place. If you look across if you look across the time frames here, in this 240-minute chart, the KIJUN Sen line is at 135.79, and up in here we can see in the 1-hour chart, this is our 1-hour chart, the future cloud is 139.74, very close together. So the two elements are setting up as a major resistance level should the price rally up into that area. So if the real setup in this is if the price rallied and found the KIJUN Sen resistance and found the future cloud resistance in an hourly chart, you've got two time frames where everything is starting to line up, and you would be looking for that setting itself up as a major resistance point. If we look at a few of the a few equities in this area. Let's take a look at the Australian index. This is today's chart. First observation in this daily chart, you can see the CHIKOU span is now out of price, ahead of price in fresh air out here. Recently, the index came back, tested the cloud area, tested the KIJUN SEN and the TENKAN SEN, both trading together here. Very strong support around this 54.30 area. And now the TENKAN SEN is starting to move up and follow the price. A very strong move. Future cloud has turned bullish and is heading up as well as our index breaks out of this area. The observation from a trading perspective is that should we get a reversal in here, we'd be looking for a setup on the TENKAN SEN or the KIJUN SEN, and certainly back on the cloud to offer support in this established daily uptrend. We take a look here on the 4-hour chart. One of the trading methodologies described in ICHIMOKU that's been becoming quite popular is looking at a 4-hour chart, waiting for the cloud, waiting for the price to come through the cloud, break out of the cloud, set the pivot area, hopefully back onto the cloud, which is done here, and then move from there. And this really suggests that there might be a move underway. You can see in the candle action, in the price action in the candles, very strong primary move here, short secondary market, even in this 4-hour chart, and the market moving higher out through there today. So a very good look. This also in the cloud area here, the cloud is starting to move up, and the future cloud is actually quite thick, showing good good primary moves underway. In the short term, we'll come right down here and have a look at this in the short term. 15-minute chart. This is this morning's open. You can see yesterday it came out of the cloud, formed the pivot area into the close yesterday, and this morning has opened and starting to trend up. We've got this intraday secondary market coming into play here, and our support area today will be 55.30 intraday. There's your KIJUN SEN right there flattening out. So that'll be your first support area. It's gone through the TENKAN SEN here and setting itself up. If it pulls back any further, it'll be looking at 55.30 in a 15-minute chart. A bit interesting that this very strong move with the TENKAN SEN also still moving up through here. So the day's not over yet, but starting to look a little positive. You've got the future cloud also moving up. You notice in the 4 time frames, the future cloud is moving up, which is a very good look as far as future moves go. But ICHIMOKU is showing you that should there be a pullback, and as traders you must always be aware there's a pullback waiting for you. Most people aren't aware that even in a primary uptrend, even when the market's moving in the direction you want it to move, if you're long, there 47% on average of the days are actually drawdown days. And you can count the red candles in here and you'll find that half of those are basically drawdown, even in an uptrend. And a lot of traders think that the market's against. The market just does what the market does. So we're going to go through this in the workshop that we'll be conducting in Melbourne. We'll spend the first part of the morning, all of 10 minutes, on trading psychology, and we find out that really trading psychology is interesting, but it's the price moves that actually make you the money. So it's how we deal with the market that actually makes us the money in the market. So I'll come back to my workshop slide here, and we'll finish up in a couple of minutes. Thank you again for coming out. We're doing this again at 7 o'clock tonight. If you'd like to have another look at this, on behalf of First Prudential, the Australian School of Technical Analysis is conducting a workshop in Melbourne on the 23rd. It is free. It is not light. It is pretty much full on for the day. It's a big day out, and it'll be in the Melbourne CBD. We're starting at 8:30 in the morning, 8:30 sharp, and there's morning tea, afternoon tea, and lunch is not provided, but there'll be plenty of places around to have lunch, and we finish around 5 o'clock there. So it is It will be a full day. You get a full set of notes with the day. I think the notes are running out about 38 pages at the moment. You can take them home with you and study them further. So thank you very much for coming out today. Really appreciate that. And as said, we're back here at 7 o'clock tonight if you'd like to have another look. Otherwise, good trading.